Okay, the commodity curve is really simple. What happens to prices over time? Well, when supply equals demand, prices don't move. They just stay flat. But then something will trigger what we call a boom. Now, a boom is created when demand is greater than supply. Now, that can be created in one of two ways, either a reduction in supply or an increase in demand. Now, for example, when Cyclone Larry wiped out all of the bananas in Queensland, what happened to banana prices? They went up. Why? Did more people want to eat bananas? No, demand was the same, but supply was reduced. So the people who had bananas to sell knew that they could charge more, so they put the price up. New Zealand earthquake, Christchurch earthquake. What do you think happened to real estate prices? Did they go up or did they go down? Most people would think they went down, but actually real estate prices in Christchurch went up. The properties that were destroyed were of course worthless, but the properties that survived then became highly valuable because more properties were destroyed than people died. Not that many people actually died, but all of those people who had their houses destroyed then needed somewhere to live, so the houses that survived became quite precious and valuable, and house prices went up. What will happen when a boom occurs though is whoever makes that commodity, as the prices start going up, they'll start making more to cash in on the boom. And they'll make the decision to start producing. But the problem is, if you manufacture anything, housing, bananas, whatever, it takes time from the decision to manufacture it to when it's on the market. So what happens is during the boom, we've got this sausage machine filling up with meat inside the machine and sausages popping out the end. But eventually what happens is the demand is met and then you can't put the price up anymore. That's called a peak. But that supply that we were committed to production then is still in the pipe, still coming through, and it temporarily floods the market. And this is what we call a correction, where supply is greater than demand. Now, as soon as prices stop moving, they'll stop initiating production on whatever the product is. But there'll still be some in the pipe to come through that comes out on the market and floods the market. Now, in 2017, you're going to see this happen in apartments in Sydney and Melbourne and Brisbane, where they've built too many apartments and they're about to oversupply the market, and you'll see quite a sharp correction in the property markets, in the apartment markets in those cities. But you won't see it with houses because there is nowhere near enough housing being produced in all three capital cities. Melbourne and Sydney not as bad. Brisbane, big problems in Brisbane for housing supply. Great boom ahead in Brisbane. All right, key point to note is after this correction, which today, tonight in the current affair we'll call a bubble bursting, but it's just a correction, the price is still much higher than it was at the beginning of the last cycle. So property investors, savvy property investors know that this is going to happen, and when it happens they're not surprised and they don't have a dummy spit. They just fully expect it and they just hang on to the property.
Hi there, I hope you enjoyed that. If you think someone else could benefit from that, make sure you share it with them. We'd really be grateful if you did that. And if you want to get into property investing, if you're serious about it, just send us a message. Let's have a strategy session. Let's go through it. We have clients all over Australia, in fact, all over the world. And we talk to our clients either in person or via Skype. Really easy to do. So don't hesitate. Get in there. It's only $297 for a strategy session, and it's 100% guaranteed refundable if at the end of it you didn't feel it was worth your while. Cheers.